Good morning, everyone. I'm Andrew, and I don't want to work anymore. Here on my channel, I trade the NASDAQ, and I'm back testing and forward testing the ICT first presented fair value gap. So, happy Monday. Let's get into it right away. And we'll set up my mug in the corner. And I always have problems with this every day. There we go. Okay. I'm going to float that on top. We are looking at trading view. Yes, it's Monday. We're going to have a little bit of a hard time getting into it today, I think. Didn't have the best workout this morning. It is 6:24 on the West Coast in Victoria, BC. And this is trading view. We're on the NASDAQ March 2024 contract. Looking at the daily, and I've been looking at this fair value gap since September 11th. That one was created, and I dragged that forward, and we had this obvious large sell-off since February 19th that everyone's been freaking out over, and I knew we were going to tap into this gap, and I think we're just going to keep going higher from here. We'll probably get up to like the 62% retracement, come back down, and then continue higher for the summer. That's just my prediction. Can it go retrace and go lower? Absolutely, and take out this low. But I think we're in good shape to keep going higher. So let's take Friday. We'll go to a 1 minute chart, and we will get Friday's closing price, which is 19,661, and we're gonna drag this over onto our chart here in CMC markets. I am not affiliated with CMC markets, so this is just the platform I like. What did I say? 19,661. 19,661 it is. 19,661, which is down here. And this is why I don't really speak highly of CMC markets. It's kind of janky to work with. It's fine, like you can trade, it's not a big deal, but I wish it was better in some ways. So we got that one, and actually I also want this closing price from Thursday. We have not worked into this gap really at all, and it's possible that we can come down into here. So that is 19,321. 19,321. That's way down here. 19,321. Well, that's not helpful at all, CMC markets. If you want to tell me the price. And that's what I mean. It's stuff like that I'm just like, give me a break. What was this? Closing and the opening was 19,004. Where is it? 19,465. $451. We'll take 451. 451. 451. Right there. Okay. We could tap down into here. Anything's possible. got going on here? What's our 5-minute chart say? Five-minute chart says we're going lower. We've been going up for quite a while, and it's just tapped through 2 candles, actually. So we'll maybe look for a move up first before we come down. And this is our 3-minute chart, which is also saying the same. We've already closed below this fair value gap. And we got this range here. So we will keep an eye on the first presented fair value gap to go lower. That's my bias today. I still think we're going to end higher, but I think we need to go lower first. And this is just a Wilder's moving average. And it's pretty accurate for a 5-minute chart. And our opening price is here. We make that purple every morning. And once we get into a trade, well, we might have time here. We got the first presented fair value gap. I made a spreadsheet. I've been tracking it since December 9th. And we got 34 wins, 32 losses, 66 trades total, positive 809 points, and a 51.52 win-loss percentage. And I don't know if I put Friday's numbers in here. No, Friday was the 14th, so I'll have to check that here in a bit. But let's keep an eye on the market here first. This is our 5-minute. I found that if you find a fair value gap on the 3-minute, it's even more accurate, but you get less of them. So you can be quite a ways into the move before you see it. Move this up just a little bit more. Too much. Okay, that looks good. You know, it's possible that we can take these highs out first before we go lower. Let's go to electronic trading hours and see. Okay, so we've already taken out New York's PM high on Friday, which means we got to come down for 555. London's low. $555. So we got our first gap here. And that one's taken away. That one's taken off. Way too far. For me, if my stop loss is going to be 5 points below this candle, 19,684 makes it 679. Yeah, that's a massive stop loss. We'll see if this comes back down a little bit. have been in already. If I can just get it to come down a little bit. Okay, I got into the trade. I'm not crazy about this entry, but that's the model. I'm afraid we're gonna tap this high and then turn around, but let's have a look at our stop loss is 66 points, which means our take profit will be, actually 66 points isn't that much. So 66 times 1.5 is 99 points. It's going to be our take profit, which is up there. Close that guy. Did we, let's see, this high. We'll adjust our stop. We'll go 5 points below this fair value gap. 109. It's going pretty good today. Going above this high. Probably due for a retracement here. Let's see how the rest of the market's doing. Ugh, I don't want to do this. Just, I'm not interested. Just give me the numbers. My watch list. How are we doing today? Bitcoin up a little bit. Albemarle's up. Baba up. Almost all-time highs. Cooper Standard, Comstock, Estee Lauder, MicroStrategy's down. Misty is down. Palantir is starting to rip back up. So doing not so bad. Over here, Looking pretty good. I think when this 5-minute candle closes, I will move my stop loss to 0. So 1 more minute. Actually, I can probably just do that now. It looks pretty safe. We are 13 seconds away. We'll actually move it right here. It's ripping pretty good today. And how far am I? I thought I saw somewhere. I used to count how far away you are from your profit target. But this is close enough for me, guys. I'll take that all day long. Close enough. What do we got? 115 bucks. Pretty good for Monday. And pretty good for a 10-minute trade. And that is the ICT first presented fair value gap. And let's make sure we do this properly. So the way so I get the first gap, and I usually enter on the first candle. As soon as it prints, after the third candle prints, that's when I close my trade, or enter my trade. And then my stop loss is 5 points below the first candle that creates that fair value gap. So that would be 62 down to 67. So I got a 67 point stop loss, and then the model is to 67 times 1.5 is my reward, is 99. So from this and this part right here, I should have just held on. I would have been totally profitable. So 99 is my objective, and we tapped right into that, as you can see. I got into this trade a little bit later though, because I was concerned about tapping this high and then coming back down, but that's why I've been back testing it. Like, I just need to enter as soon as this third candle prints and be good with it. And as you can see on the spreadsheet here, today is the 17th, so I would have been 99 points there. And we will go to trading view and see how we would have done on Friday. Electronic trading hours. So that's right now, Friday. If we took the first presented fair value gap, even though I did make money on Friday, it would have been right here. I'm going to spread this out so you guys can see it a little bit bigger. But we can't trade on the first candle as per ICT. So the first gap would have been right here, and we would have been going long, and I would have entered on this candle right here, and the stop loss is 5 points below this red one. So that's 46 plus 5 is 51, and we want 1.5. And we would have got it on Friday at 76.75. So we'll just put 76 points. Oh, look at that. It just tapped. I don't know if that would have been filled before it turned around. Not to say that we're not going to keep going higher here, but what did I say? 76 on Friday? 76. Back to the spreadsheet. So 76. And we can go now. We have 36 wins, 32 losses, 68 trades. We are positive 984 points and a 52.94% win-loss ratio if you follow the model as I just outlined now. That's not a lot of points to be positive, you know, over that span of time, but it's still profitable. You know, well, it depends on how many contracts you have. Like, that could still be a lot of money. You know, on one micro, it's not a whole lot, but you start stacking a couple micros, like, that could be some pretty easy money, especially when you get a day like today when you can tap into that in 10 minutes. So that is my ICT first presented fair value gap model. I have back tested it since, like I said, December 9th, I think. And sure, there are days where it rips way higher. But I found, as you can see, the 1.5 risk to reward gets you the most wins and overall the most points. But I think if you got, you know, if you started moving your stop loss up, you could do better. If you really find days where it starts to run, you could do better if you're, I don't know, better with your stop loss in general. But I get all excited, and this is just a mechanical way that I can trade and make sure I always have the most amount of wins. We'll also look at the stock market one more time. Obviously, everything's up, and anyway, that's it, guys. I hope you guys have a good day. We'll see you tomorrow.